In order to be approved for the NEA programme, your business broker will by now have explained that you need to complete a cash flow forecast and personal survival budget to accompany your business plan. So what follows is a short explanation of how to complete these forms. So why do we complete a cash flow forecast and personal survival budget? Well, quite simply, it needs to be completed in order to help you decide whether this is going to be a profitable business or not, and if you can earn enough to survive on. It's a decision-making tool that will help you avoid overspending and give you greater control over your finances and spending decisions. Now, for those of you applying for a loan, this will be of particular importance as it will help the loans company determine whether or not you will be able to meet your monthly startup loan repayments. So let's break it down. As a suggestion, you may wish to pause the video at this stage to make sure that you have a copy of the Excel form in front of you so that you can look through it at the same time. Now, first of all, when you open up the Excel sheet, you'll notice at the bottom that there are 4 sheets. So, first of all, please read the guidance sheet, which you can see a copy of here, and then we're going to complete in numerical order, starting with number 1, the personal survival budget. Page 1. What is a personal survival budget? So a personal survival budget details your average monthly income. So, for example, any part-time salary that you receive or any benefits payments. You will then minus all the costs and expenses that you would incur in a typical month. For example, rent, mortgage, utility bills, monthly grocery bills, etc. As the name suggests, this is a personal budget, so do not list any items bought for the business in this section. Personal survival budget, personal income. Quite simply, how much money will you have coming into your household budget? Examples of incomings could include universal credit, child benefit, maintenance payments, personal independence payments, industrial injuries payments, pensions, or maybe part-time earnings. Don't forget that your hours for part-time work need to be under 16 hours to be eligible for this programme. Now, for those of you who are currently claiming JSA and ESA, don't forget that these payments will stop once you start receiving the NEA payment, so do not enter the figures that you currently claim. Personal survival budget. So now you need to take a look at your personal expenses in terms of what you are spending on a monthly basis, and it is recommended that you take a look at your last 3 months' bank statements for a more accurate figure. Please also bear in mind when you complete this section that this is not what you want to spend, but what you need to spend. So the types of items you might need to consider here are rent and mortgage payments, council tax, utilities. Now here you can group together items such as gas, electric, water, etc. Phone, landline, internet, TV licence, personal and property insurance, grocery shopping, transport costs, car tax and insurance, subscriptions, clothing, leisure entertainment, money into savings. Now if there's any other regular outgoings that we've not considered, then please put those into the other pink section below. Now the easy thing about completing these forms is that everything will be calculated for you, and as you can see in this example, looking at the picture in the top right from the figures that we entered, the monthly balance is £55 and the annual balance is £660. Now just to make you aware, should the balance happen to be in deficit and in the red, please note that this figure here will be transferred directly onto page 3, the cash flow forecast, but we'll come back to that shortly. You will also note at the bottom of the form there is a box for writing notes or commentary should you need to. Please use this section to write any notes that may be important for the loans company to be aware of, in particular if the annual balance is in the red, but do obviously discuss this with your business broker and they can explain this in more detail. Sales assumptions. This form is actually quite simple to complete as you only need to enter figures into the top 2 boxes that are in pink. The figures that you add here will be calculated into the grey areas at the bottom. So we want to take a look first at your product breakdown and sales per month. And by the way, it is advisable when entering any figures into your forecast always to be pessimistic with sales and over-optimistic with your costs. So let's begin with your product breakdown. In the picture below, we've taken an example of a mobile hairdresser just so that you can see an example of how you might break down a service element. So first of all, let's take a look at the sales price, which is basically how much do you sell the product or service for and how much was the cost price. So having a look at the chart, you can see here product breakdown. So as a hairdresser, for example, in the first line, product service name, they might put a colour, cut and blow dry, a cut and a colour. And then they'd work out the sales price, the cost price, and then this chart will calculate the gross margin per unit for you. So you don't need to do anything there. All you need to know is what you're going to sell it at and how much it costs to buy it at. Now you'll notice where we've put cut, £15. For the cost price, we've put 0, and in gross margin, it's come up with that strange figure. So don't worry too much about that. It has calculated that for you. For some reason, it just does that when you put 0 in. Now, by the way, when you have a look at the actual Excel sheet, or if you have a copy in front of you now, you will see another example of where somebody has done a product. So here they've used a t-shirt as an example. So your sales price per unit may be £25 that you sell the t-shirt at, but you make or buy it in at £12, which is your cost price. So your gross margin for the t-shirt would then calculate at 108%. Again, only complete the pink boxes, as the Excel form will automatically calculate your gross margin in the grey sections. By the way, any figures that you enter here will be automatically calculated onto page 3 in your sales forecast, which we will come to shortly. Next, you need to take a realistic guess at how many customers you think you may have on a month-by-month basis. So, taking a look on line 1, for example, the hairdresser in his first month may forecast 4 clients for a colour, cut and blow dry, 16 clients for a cut, and 3 clients for a colour. As the hairdresser begins to market his business, he is likely to increase his customer numbers at the month after and so on, so this will be reflected in the forecast. When you complete this section, also take into account perhaps seasonality and other promotional activities that may increase or decrease revenue for a particular month. So for example, the hairdresser may be busy for party season in December, but quiet in January when people are recovering from Christmas. So if you have the Excel form in front of you and you were to now scroll down on page 2, you will notice, as I have put in a picture here, that the column underneath the yellow arrow has all automatically been calculated for you. And furthermore, the information from here has also been automatically transferred onto the cash flow forecast on page 3. So as you can see, this is a very simple form to fill in. And just to show you what the automatic calculation on page 3 looks like. So as you can see, looking at the yellow arrows, the figures of £635 inputted on page 2 in the sales assumptions in the top chart has now been transferred across into the cash inflow on page 3, if you look at the first line on the bottom of the chart. And this will be exactly the same process for the cash outflow as well. Moving now to page 3, why do we complete a cash flow forecast? Well, first of all, a cash flow forecast can be used to help you identify, first and foremost, if the business will be profitable, and also how much initial cash investment your startup business requires, when your business may need other finance such as an overdraft or loan, the level of loan repayments the business can afford to make each month, and when your business will be able to spend cash in the future, for example, taking on a new employee, paying for a marketing campaign, or perhaps the purchase of equipment. At the top of page 3, firstly we need to look at any incomings into the business. As mentioned earlier, you will notice on the first line where it says total anticipated sales, this is in grey, and this will automatically be calculated for you from the figures that you inputted on page 2. On the second line, if you were taking out a loan, then enter the start loan amount into the first column under starting point. On the third line, cash or equity could be money that you or an investor have privately put into the business, or it could even be a gift from a friend or relative. And on the fourth line, existing assets, this could be an item or resource that might help you generate cash. And on the fifth line, in the pink area, you'll notice that in this example we have also inputted the NEA payments, which, don't forget, are £65 for 13 weeks and £33 for the next 13 weeks. However, on this form, that needs to be worked out as a monthly payment rather than weekly. For the next stage, you need to consider what your monthly outgoings may be and at which month those payments may need to be paid. This allows you to plan your year ahead, So let's take a look at the type of outgoings you may need to consider for the business. Total anticipated cost of sales. Well, as you can see on this chart in the grey boxes, this has been automatically calculated from the figures entered in the sales assumptions on page 2. So in month 1, you'll see £78, month 2, £102, and so on. So other things could be existing assets for business purposes, rent or premises cost, business rates for your business premises, utilities such as gas, electric, water, insurance. Now you may be given the option to pay monthly or quarterly instalments, which you can then reflect in the forecast, telephone and internet, marketing and advertising expenses, vehicle running costs, equipment purchasing or leasing, postage printing, stationery, transport and delivery, professional fees such as legal, accounting, etc. Your salary if PSB is in deficit. So just a side note here, on page 1 in the personal survival budget, if your balance was in deficit and showing red, the figure will automatically have transferred across onto this line on page 3, so please do not delete this. And also for those of you that will not be earning any other forms of income whilst you start and grow your business, so for example if you have been claiming JSA or ESA but are no longer, then you are likely going to need to draw on some of your business earnings to support yourself. The minimum salary you require needs to be included at this point in your cash flow forecast as one of your expenses, along with any other staff salaries. Other items could be your startup loan and monthly repayments, first loan. And of course, Class 2 and Class 4 national insurance payments can also go into this section. It is advisable to pay this money into a separate savings account on a monthly basis, which will then help ease the burden when your national insurance bill arrives at the end of the financial year. Just a note regarding this page, you will notice the little red triangles in the cash outflow section. If you hover over one of these, it will bring up an explanation, so have a read of these before entering any numbers. For the final calculation, all the figures that you have entered above will now be automatically calculated in the boxes below. So you will see your net cash flow, which is the cash out minus from the cash in, your monthly opening business account balance, and your closing cash position for that month. Now the figures need to be achievable and realistic. And please note that if there are any figures in the red, it is unlikely that your application will be approved. Each month should aim to show a profit or at least a break even. Should you have a business model where you may not be able to earn a profit for the first few months of your business, then please do speak with your business broker so that they can help you with this section. So that is the end of the instructions for the cash flow forecast and personal survival budget, and as you can see, it is a fairly simple form to complete. However, do not forget that your business broker will be there should you have any problems completing this.